Consortium financing. Introduction. So in this introduction, we will see what is consortium financing, what are the norms of consortium financing. So first, what is consortium financing? In order to meet the working capital needs of the borrowers under consortium financing, the banks formally join the borrowers' arrangements or individual consortium by way of an inter se agreement. Now, the bank and term lending institutions come together in the case of project finance. For consortium lending, the central bank has allowed the individual consortium to frame their own norms. So that is what is consortium financing. Now, what are the norms of consortium financing? Actually, the bank fix their own ceiling as long as their exposure does not exceed the prudent credential exposure ceiling of 15% of their capital funding. This is for individuals. For groups, it is 40% of their capital funding. Now, any number of banks can participate in an individual consortium as there exists no ceiling on the participation by banks, but consent needs to be taken from the consortium member in order for the banks to extend any credit facility to the participating borrowers in an individual consortium. Now, next we'll take a look at what is the consortium financing process. So it is loan application disposal, appraisal, documentation, asset classification, follow-up post-sanction and charges made on security. So these are basically the steps in which the consortium financing progresses. So first is loan application disposal. So here we talk about time limit for loan application disposal. Banks unable to release loans in individual consortium. So those are what we actually briefly touch upon. So regarding time limit for loan application disposal, there is a time limit extended in the case of loan application disposal and is 45 days for loans in relation to export. For export, it is 45 days. 60 days for fresh loans or enhancements, 30 days for ad hoc facilities and 45 days for renewal of existing loans. So that is a time limit for loan application disposal. For banks unable to release loans, what do they do? So if the banks that are participating in the consortium is unable to release loans with respect to the time frame of loan application disposal, the borrowers are encouraged to bring in new banks to the individual consortium as per agreements that need to be framed henceforth. So that is what happens for banks which are unable to release loans. So new banks come in, that is what happens. Next is appraisal, about appraisal notes. So appraisal note is prepared and circulated by the lead bank in the individual consortium, and arrangements are made for convening meetings, etc. The fee for which will be borne out by the borrowers or by the borrowing unit. Next is documentation. This is done using single window scheme where the documents are obtained, and for all banks a single set of document will be used. No different set of documents will be distributed to each participating bank. And then there is asset classification. So according to the conduct of account with the banks concerned, each bank classifies a loan account of the borrowing unit irrespective of the loan account's classification with the other banks in the individual consortium. What about follow-up post-sanction? Post-sanction of the loan, the banks in their meetings with the consortium members share information about the conduct of the loan account as well as the performance of the borrowing unit, where these meetings are held at regular intervals. Also, the last step may be charges made on securities, where charges are exercised by the bank over securities is in the ratio of their exposure approved by consortium members through a formal agreement which is put in place during their first meeting. So this is basically the steps which the consortium financing process has. So we have almost covered most of the steps. Finally, what is multiple banking? What is multiple banking? So in multiple banking, credit facilities are allowed by the banks without a formal arrangement between themselves, where the bank make assessments on their own credit needs and determine such parameters as terms and conditions, rate of interest and margin within the stipulations given. Usually the charge on the securities may remain first or second and is carried forward by a charge ceding letter on the type of charge to be exercised. So that is multiple banking, and this completes a very fundamental look at what is consortium financing. Thank you.